But can the company monetize all the hype? JMP warns growing competition in the space could make the path to profitability more difficult. And I'm a little surprised to see that you think it's a buy, Victoria.
I do. I know it's a little counter, but this is their make or break quarter. They have to show top line sales growth. The opportunity is there. They just need to grab it and go out there and sell and get their product out there more. They had such a lead in the clubhouse, but now they need to deliver on these results. Look, they've been moving over more from platform-based to application-based. I think this will be a little bit of a cleaner earnings report for them so we can really see what that runway looks like. But they need to get in there. They need to get into these enterprises. They need to expand beyond energy and beyond Internet of Things and really expand to the broader enterprise IT before they lose market shares to, say, a Salesforce or an Oracle or IBM. It's there for the taking. They need to execute this quarter. So pressure is high. Obviously, you see short interest, 35%. Wow. Not a lot of believers anymore, but I think they can. This quarter is really going to be where they can execute and sell and grow, or they're going to get left behind.
Okay, so only a little bit at stake. And by the way, the Chairman and CEO Tom Siebel will be on ahead of the earnings call on Closing Bell Overtime today at 4 p.m. Eastern. So it'll be a very busy and maybe fun, depending on your definition of fun, afternoon for them. Let's move along to ChargePoint then, which the EV charging company, well off its late 2020 highs when it was nearly $50 a share. You see it today around $7. But JP Morgan says the risk from Tesla chargers and the national standardization everyone's been talking about is actually a little overblown as EV penetration continues to grow. Victoria, as you say, it is an EV pure play, but you're still a little cautious here. Why?
I am. I think EV adoption just moving a little slower this year than we anticipate. Surely there's a lot of money going into chargers. You've got all the infrastructure bills. I think there's something like $2.5 billion over the next 2 years, $7.5 billion over 5. So there is market share there, but there's competition. You know, the charging networks are rapidly developing, and mostly it's about if it's a little slower EV adoption in the U.S., which we've seen a little bit slower sales in EV car sales, then it could just not be the runway they want because they're still trying to move to positive cash flow. We'd love to slow that cash burn, so there's going to be a lot of pressure. What do their margins look like? What was their cash burn look like? And what's their runway to eventual profitability in about 24 months? You know, I just think it's a longer runway than what JP Morgan says. Obviously, maybe in 5 to 10 years, if we see the EV market play out the way the market thinks, it could be a great investment. I just think you might be a little early now considering the softness in the second half we're seeing.
Yeah, again, a sort of a show me story in a very different way as those shares are down about 25% in the past couple months. So we'll turn to Dave & Buster's then, which has given back some of that 20% pop they saw on the last earnings, but remain in that sweet spot for consumers looking for experiences. Raymond James says it's a strong buy as they're introducing token-based sports betting, whatever that means, and social games like shuffleboard and darts, which sound fun to me, actually. So what would you do with this one?
Yeah. They're a buy for me. Look, they're a high-quality, high-end entertainment storefront, and they have a diversified offering you can't find many other places. They talk about a little bit Topgolf or amusement parks, but they really have such a unique offering, especially when they bought Main Event in 2022. They expanded what they can provide, not just, you know, video arcade for the kid at heart adults. It really is a fun place to gather, and they've really expanded their digital and mobile reach. And if they get more into sports betting, if they kind of go more into where some of these markets are playing, they're going to get more people in the stores, people drinking beers, people playing the games as they're there to watch the games. And I'm really excited about their management team. It's a fairly young management team. The CEO, COO, and CFO really not even there about 12 to 24 months. And they're very growth focused. If you looked at their Investor Day presentations, they have a good roadmap. I don't think that last quarter was just an anomaly on sales growth. I see them being able to have consistent sales growth. They're being very picky about where they open locations, and they have great margin. They talk about they have 0 stores that lost money.
Wow, impressive. It says a lot about site selection and so forth.